What's up, my fellow wealth creators? Matty Guys here. I wanted to share an awesome podcast that I just did and just had a great conversation with Chris Kirkpatrick from Life180, which I'm now a proud agent of. Really proud to join his team and just sharing his mission to share how powerful dividend paying whole life insurance is, expose the truth and risks involved with IUL. That's been quite the journey. But in this video, we talk at length about economy, the chaos and uncertainty that we're dealing with right now in our country, what to do about it, using whole life, how it works. Of course, we're going to talk a little bit about IUL also, but just overall, a really, really good conversation. So I wanted to share it with you guys. Would love to hear your feedback. Drop it down in the comments section below. Also, if you have any questions, if you don't mind too, just do me a solid. If you find the video helpful, just hit that like button. It really does help spread the video out, get the video out to other people. So enjoy the conversation, and I will talk to you soon.
All right, I think we are live. What's going on, wealth creators? I have the honor and privilege of having one of my mentors, Chris Kirkpatrick, on the channel, and we're going to have a lot of fun today talking about whole life insurance, the economy. We've got to beat on IUL a little bit. I wouldn't say I'm as passionate as I'm getting there. Not as passionate about exposing it just yet, but I'm definitely getting there. And the more I learn about it, I could see your frustration with it. It's just an incredible rabbit hole to go down. But hey, man, I really appreciate you being here, and I've been looking forward to this for a long time. And where I thought we would start is actually my journey getting to your agency and the journey of discovering whole life insurance and IUL and stuff like this. And the reason I want to start there is to demonstrate to people how important it is to do your research on these things. When you're making major financial decisions, I guess it would be with like any major decision period, but specifically talking about finances, it's so important to know what you're putting your money into. And, here I am now. I've got my channel. I'm joining you on the front lines, talking about IUL, exposing the lies about it and all that. And now I'm a member of your agency and stuff.
Good to have you.
Yeah, man. And it's just been such a crazy journey. And I want to start there, and then we'll get into some whole life and IUL stuff.
Cool.
So I started a marketing agency just like you, probably maybe 6-7 years ago. And, it took a while to get some momentum. And, eventually it started to take off. I started doing pretty good, and at least for me. And I was super broke for a long time, man. I made a lot of bad decisions early on. Fortunately, I was able to recover from from building up my other YouTube channel, my marketing agency. And I got really good at saving money because once you're broke, you never want to go back, right?
Totally.
Okay. So I got really good at saving money, and I reached a point where I wanted to put that money to work. Mm-hmm. And I had heard about IUL a long time ago and the infinite banking concept. I was just never in a position to really take advantage of it. And so I figured, hey, I've got money saved up. I want to put it to work. Let me revisit this conversation. And Chris, I tell you, I was this close to pulling the trigger on an IUL. And I was consuming a ton of Doug Andrews content and all that.
Oh, no.
Chris, I kid you not. I was at the gym one day listening to Doug Andrew, and one of your videos popped up about the Doug Andrew lawsuit and risks of IUL. And that's when I went down a completely different rabbit hole. And I thank my lucky stars that I found you every day, because I was so close to pulling the trigger on that. And I think about like how risk averse I am. And if I had put the amount of money that I did into my whole life policy into an IUL, how devastating that would have been for me. And so first, I can't thank you enough for doing what you do, man, because it really does make an impact on people. Thanks, and brother. I tell this story to speak to the audience here for just a second, to make sure you understand what you are putting your money into, whether it's whole life or IUL or anything else. Because when I found Chris's content, none of the risks that he was talking about were disclosed by any of the IUL agents that I was listening to. So I was ready to make this major financial decision
based on half the information, and without all the risks being disclosed. And that is so dangerous, man.
Pretty standard.
Yeah. And so I wanted to start with that. I'd love to hear your thoughts on it, and also a little bit of your journey in this business and what whole life insurance has done for you, and just kind of your journey in the business as well. What are your thoughts on that?
Wow. Yeah. I mean, I got into the business not knowing, we all kind of start from this place of we don't know what we don't know. And I think that's always the case, right? It's like, I feel like one of the things that I always do is I try to prove myself wrong, more than proving myself right. And I think one of the challenges, especially in this business, is what we would call confirmation bias, where people just kind of, there's obviously when you start selling things to people and you start having your reputation on the line and relationships, at stake. And, I can say that when I got into the business in 2009 as a life insurance agent, I was hook, line, and sinker IUL. Like I drank the Kool-Aid, all the analogies you could use applied, right? And I was all in on IUL, and I sold a lot of it over a 4-year period. I guess a couple year period, the first 2 years. And then I got promoted because of the success that I had. I got promoted to be a manager. And then because of my success in recruiting and training and growing a team, they made me a regional director and then director of business development for one of the top IUL companies in the country. And so the challenge for me was that the more I learned, the more I realized, like, the more I started to get these kind of like seeds of like, something's not right,
Right.
and it just didn't feel right. And then it was actually a conversation I had with Don Blanton at one point in time, who was the guy who runs Circle of Wealth. And he basically called me to the carpet a little bit and told me that I didn't know what I didn't know. And I was like, no, man, you just don't understand it. He's like, son, I've been doing this a long time. Like, you might want to consider some things. And so I did. Anytime somebody of that, level of credibility is going to ask me to do something, I'm going to do it. And so I did. And then as I went down that rabbit hole, I realized, like, holy crap, this isn't what I thought I was doing. And, that's a simple version. But I remember going to President's Club with the company and getting offered a promotion and all these things and a bonus, signing bonus and all this stuff, and going back to my wife, but, in the hotel room and talking to her and being like, because I went to this trip, by the way, it was going to be like my last trip, because I had made the decision that I didn't want to do it anymore. I couldn't ethically put my head on my pillow at night and sell people that product. And I realized I had reconciled emotionally that I was going to have a lot of really tough conversations with people that I cared about, that I sold these products to. And so then, I get there, and this is just, the universe tests you out a little bit, right? And so I get there, and rather than make it easy to quit, because I was like, I'm at least going to enjoy this vacation before I, this trip, and go to the Bahamas and Atlantis and all this stuff before I go. And then while I'm there, they offer me this promotion and signing bonus and all these things. And I go back to the room and I tell my wife, and she's just like, well, you can't do it. And I'm like, but like, I'm 33, almost 34 at the time. And I'm like, how do you just walk away from this? So it was really hard. But ultimately I walked away, ended up getting into a legal battle over like non-compete, non-disclosure stuff. Won the legal battle. They sued me again, or they threatened to sue me again. I had to give up my license for, 6 years, to just make it so I didn't have to shut up, because if I had my license, I couldn't have created the content. And so a lot of people don't realize it. The reason my channel is so heavily focused on anti-IUL stuff is because when I first started the channel, I was not licensed really. I couldn't really sell anything. I had a couple videos that I had made while I was licensed, but they were like kind of insignificant. But the channel really started getting focused when I was just more in like the stick it to the man kind of mindset, where I was like, holy crap, these guys have tried to screw me. They're screwing everybody that buys them. There's hundreds of thousands of people buying policies every single year, and every one of them is getting screwed pretty much. And so I was like, if I could make some content that at least gives a little bit of exposure, it was kind of, I felt my responsibility to do so. And so it just kind of built from there, you know, and for 2-3 years, there was nothing that came from it. You know, I got no traction, no real growth from it. But as IUL got more popular, as a couple of videos took off and, you know, whatever, it started to grow and grow and grow. And it's amazing what happens when you're just consistent with the stuff,
Sure.
you know? And so, you know, so then 2022, I got my license again. And or I guess beginning of 23, I got my license again. And we got the agency and, you know, the rest is history. Here we go.
Right, man, that's a hell of a journey. Can you imagine how much different your life would be? Like I think about this sometimes, how much different your life would be had you not had that one conversation that really made you think like really think about what you're doing here, right? Like how different your life would be right now had you not had that one conversation. You ever think about that?
Yeah, I mean, every day. Like honestly, like it's that one conversation. I remember. It's crazy. It was so impactful to me. Like I remember where we were in his neighborhood, going over a speed bump, riding in his Hummer. Wow. You know, and I'm like, I mean, like literally, I remember the very moment when it was like, oh, like there's no way you're right. And then I just, you know, you just got to kind of backpedal. And yeah, it was crazy.
That's crazy. Yeah, and you know, I'll tell you, it's why I'm so passionate about doing content and doing YouTube channels and stuff. Like you mentioned, it does take a while to get some traction. I think that's why a lot of people don't do it. Plus, it's a lot of work, so you really have to enjoy it. But you know, one of the things that keeps me doing it, though, especially this new channel and joining your agency and talking about these things, is because I know what your content did for me. Right. It saved me from this potentially devastating financial decision that it's just like you always say, it just was not in alignment with my values, beliefs, risk profile, and what I was trying to accomplish. And I want to replicate that. If I can help one or two people avoid the same exact thing, that there's just like this purpose behind it, you know, this obligation that you have to share these things. And it's, you know, no matter how long it takes, man, it's such a positive impact that you have on people, you know, because of it. Man. So
it is, and it's awesome. And I always kind of tell people, if you're going to do this, I mean, there's that cliche out there where it's like, or at least in the content creation space, it's find something that you love to do and like create content that you just do for yourself and that you have fun with and, you know, whatever. And I think it's easy to say that, but it's harder to necessarily do that. And you know, for me, it was a no-brainer because I literally did it for 6 years with just kind of like a pay it forward mentality. Now, you know, the more time went on, the more success it had. Obviously, you start realizing like, oh, I'm going to start dedicating more time to it, you know, because I'll tell you from 2016 to 2020, I think I was at like 2,500 subs. From about 2020. And then COVID happened and I doubled down and like you had launched a marketing agency. And then when COVID happened, I was dealing with a lot of brick and mortar class A building type companies. And so I lost all my clients overnight in like a 3-day window. Crazy. Yep. And so I was like, what am I going to do now? And so I was like, I'm just going to go back to what I know and I'm going to start focusing on all my marketing skills, but just for life insurance agents. And so I started doing that. And that's what really had me double down kind of on the YouTube as I shifted from all IUL kind of and whole life stuff to doing some marketing stuff. And that gained some traction. And, you know, from there to now, it's been amazing.
That's awesome, man. Yeah. It's just got to stay consistent with it. You know, that's the most important thing. So let's, I want to transition over to, let's talk a little bit about whole life. You know, we're both really passionate about this stuff. I think it's the most powerful financial asset in the world, in my opinion. There's just nothing that beats it because it solves so many problems at once. And we talked a little bit about this on the panel the other day, which I appreciate you hosting. And I'd like to get your opinion on like, why do you think, because I personally think that whole life and dividend paying whole life insurance is actually more important than ever right now because of all the chaos, the uncertainty, debt levels. You know, we just don't know what's going to happen. I'd love to get your thoughts on what do you think it's really, really important and why it serves such an important part of somebody's financial foundation right now?
Well, this could take the rest of the video. So the, here's the way I look at it. We have to focus on financial structure. I talk about it all the time, before anything else. I think one of the biggest challenges in the world is people are kind of taught the younger you are, the more risk you can take. And while that may have an element of truth because you have time to make up for your mistakes, from a pure math perspective, it just doesn't make any sense. It's like, we have this idea of like trying to chase bigger returns. We all know we have to implement more risk, and they try to convince you if you're younger you can take on more risk, but only in the financial space are we convinced that we increase our chances of success by increasing our chances of loss. Like it just when you really break it down, like it makes no sense. And so I think whole life right now, when you look at the world around us, especially in the US, there's all this uncertainty around the economic world, the status and the valuation of the dollar being the world's reserve currency, and how that has kind of financed the lifestyle and the quality of life for all Americans across the board. I think you look at the political uncertainty. I think you look at inflation, you look at unfunded liabilities and national debt, you look at consumer debt being at all-time highs, and like everything is pretty much the worst it's ever been for all the important metrics, right? And it's just like, something's got to give, I guess is the way to put it. And so if we know that something has to give, and then I think what happens is people go, okay, what about crypto? What about this? What about that? Like all these digital tokens and whatever. And it's like, I'm not against Bitcoin. I'm not against Ethereum or, any of these coins. I just think it's like, they're still speculative, I guess is what I would say. And it's not that they're bad for the right people, but if you need that money to be liquid and there's a chance that you're going to need to lean on that money, then it's probably a bit premature for you to be putting the bulk of your life savings into an asset class that is highly volatile, right? And so,
including the stock market.
Yeah. Well, I mean, but it's not like crypto is like stock market volatility on steroids, right? Like it's crazy. You're talking 10% daily swings. It's like it's insane. And so, when I look at that's kind of what I think. But like, as far as whole life as being the vehicle, the reason I love whole life insurance as the main savings vehicle is because I think everybody should have 2 years of income in safe, liquid, accessible capital, period. Now, it doesn't have to be in a whole life policy. I just think, principally speaking, you should have 2 years of income liquid just because you want to have a year for emergency and a year for opportunity. That's kind of my philosophy. And so when you look at that and you reverse engineer it, then you start going, okay, if that resonates with me on any level, then the question then becomes, where do I save that money? And most people say, well, maybe a bank account, maybe CDs, maybe bonds, maybe something like that. Those are kind of the more common places that people think of saving. But when you start backing into it all, then people start going, all right, like, how do I feel about banks? Like, what does the, FDIC insurance look like? What are the bank failures? I mean, I just saw an article today with one of the top real estate CEOs in the country saying he thinks 500 banks are going to fail and get consolidated in the next 18 months in the United States.
That's crazy.
That's insane. Right? Yeah. But it's not, because 567 banks failed in 2007 and 8. So like, it's not like this is unprecedented. You know what I mean? Like, this has happened, and it hasn't even happened that long ago. It's like less than 15 years ago, So it's not that outlandish to be thinking that this stuff is going to happen. It's just history repeating itself. And I would say, I think the reason we got out of the last time 15 years ago is because of artificial monetary policy with money printing and, stimulus money and all these things that have enabled the bubble to build back up bigger than it should be. So this time there's a chance it could be worse, And so now I'm not a doomsday guy. Like I'm not, I'm not even bearish against the US dollar like a lot of people are. I honestly think, like, in 2008, the best asset class in the world was the US dollar, which is bull crap, like, in a lot of ways. Like, it makes no sense, but it's just like people underestimate politicians' ability to manipulate stuff, and they don't, they underestimate the fact that the monetary system is just kind of a scam, and it just is what it is. And you can either get upset about it, or you can acknowledge that that's just the world we live in, and you can
Right.
try to figure out what you can do about it. And so when I look at it, is like when I keep my money in a safe, liquid, accessible account, I needed to have guarantees, and I need to know that my money is going to be there, that I'm going to have liquidity of that money. And so, do I believe that about banks? Not with big amounts of money. I have my own concerns. And when I look at like the history of banks and the failure of banks and all that stuff, it's just like, I'm maybe not as extreme as some other people, but there's no money to be earned in banks either. If you put your money in a savings account, what are you going to earn? Like right now, it's a little better, maybe 4%. But historically speaking, over the past 20 years, it's been maybe 0.5% if you're lucky,
Right.
And so I want to get decent returns that are going to beat inflation from a long-term perspective. And then when you look at whole life insurance, it's going to do that. It's going to give ancillary benefits. And when we talk about wanting to have an emergency fund, I think the challenge that people have when they think about emergency funds is they're just thinking about the fact that they need money to cover their bills if they lose their job. But to me, a real emergency is, what if you get in a car accident and you get a traumatic brain injury? What if something happens and you get cancer, or you're sick, or like whatever? To me, those are emergencies that are far greater than losing your job and having 6 months of income in savings if you get diagnosed with like stage 4 cancer with something, is way worse, infinitely worse than losing your job. And what's your emergency plan for that? Whole life is going to have living benefits that help you control your medical directive along the way, right? Like,
Absolutely.
so like that's a part of it. But then like, if you want to start going really extreme, and I've done videos on this, but like you want to start going really extreme is like for the people that, and by the way, I don't know if you and I differ on this, but I'm not really worried about the dollar losing its world reserve currency status anytime soon.
No, not anytime soon.
That's me personally. I know a lot of people disagree with me. I talked to Chris Noggle the other day, and he disagrees with me. But I think we're good there. But that said, I want to have my money in a place that no matter what, I'm taken care of. So if you're worried about the fiat money system and the world's reserve currency status and the Fed launching like a CBDC or something like that, and that's kind of making it so you don't want to put your money in banks. Well, what's your alternative? And to me, a whole life insurance policy makes the most sense. And the reason I say that is because whole life insurance companies have been doing this since 1840, like literally 1840. They've never missed a dividend payment. They've always paid, and the returns are always better than bank accounts, right? And so when we look at that, and it's like, all right, 1840, and we go backwards in time, that was 23 years before Lincoln got assassinated. It was before the Civil War. And so they paid a dividend successfully every year, even during the Civil War. And I'm going to tell everybody right now, if you think things are going to get worse in the United States than they were the Civil War, you got another thing coming, right? Like you should probably come to the Dominican with me if that's the case. But like, like do something extreme, as long as you're not hurting anybody else. Like do something extreme to improve your life. But like then on top of that, like they've gone through 3 different versions of the US dollar. Whole life insurance companies have been around and have endured and made transitions for 3 different versions of the US dollar, right? And so like people lose sight of that. And so if you're worried about the world's reserve currency status and the valuation of the dollar and all these things, by having your money in a bank, you're participating in the fiat money system. By having your money in a whole life policy, you're participating in the fiat money system right now. But I promise you, if things change, if things get bad, the general fund managers of these life insurance companies are going to manage that transition better than you, better than me, better than Matt. Like I think I'm smart. I'm not that smart. You know what I mean? Like these guys, this is what they do for a living, and they're managing billions and billions and billions of dollars. And now you're talking about, and I've done this thing, like banks and corporations have 80% of all cash value in whole life insurance in the world. So do you think those people are going to just let their money go up in smoke? No.
Probably not. No. It's a lot of really good stuff there. It's why, I say on my channel now, I sleep so much better at night having the large amounts of capital for my emergency fund and opportunity fund with a mutually owned life insurance company, because they have a track record, just the best track record that you could possibly ask for, managing the chaos and the uncertainty You know, because we always like to say that this generation is different or whatnot. Maybe it is, maybe it's not, but that's not really the point. You know, we could never hope to have all of the information and to make sure that we're doing all the right things to mitigate all of this chaos and uncertainty. Just let the life insurance company do what it does. And if you just look at history, just how many banks have failed, how many, like, if you just think about like the unrealized losses that banks have right now, are we really willing to roll the dice just because there's FDIC insurance and, you know, oh, Wells Fargo, nothing can happen to Wells Fargo, right? Dude, you got another thing coming, man.
Dude, the banking system right now, like, I don't get extreme about many things, but like, I'll say something extreme right now. The banking system is a Ponzi scheme. And the reason I say that is because if you look at the three of the major banking failures that happened earlier in 2023, the reason that they disclosed that they failed is because they had a lacking of new deposits. Therefore, they couldn't pay out the money that they owed on interest. And so from that perspective, if a bank needs to keep getting new money in and they need new deposits to be sustaining and they don't have the reserves to manage it, and that new deposit is required, that by definition is a Ponzi scheme. And why nobody is talking about that, why this is still allowed to perpetuate, is mind-blowing to me. Because I mean, they straight up said in their filings that the reason that they failed is because they had a lack of deposits.
Right. Yeah, that's crazy, man. And like you said, there's a lot of things outside of our control. Are we going to change the financial system, fractional reserve bank, and all this? No. But we can change where we put our money, 110%. And for me, it's dividend paying whole life insurance with a mutually owned life insurance company. And I got to tell you too, there was something that you mentioned earlier about like the younger you are, the more risk you can take. And I find that statement almost offensive now, because I lived that very much, thinking, oh, I'm young, I'm going to take this risk, do this, that. Like I wanted to be like this stock and options trader. I left a really good career to go out to Vegas to be this trader. It was terrible advice. and I went through this anger phase a little bit when I started going down this rabbit hole, because like I thought to myself, why wasn't I taught this stuff like early on, like, because if I had, and I had this I was taught these basic financial principles. I was taught to put a really solid financial foundation in place, and the best way to do that. If I was taught those things, maybe I would have still made the same mistakes. Maybe not, though. Well, we'll never know. But I would like to think that the chances would be pretty good that I wouldn't. And I just like when I see all the benefits that we get from these policies, it's just what's really mind-boggling to me. Maybe not mind-boggling, because the system is designed to keep us uneducated about these things. But I really wish more people knew about this, because when you understand how they work, it almost becomes a no-brainer. You were talking about emergency funds and having liquid access and to your money. And a lot of the times people think to do checking and savings accounts, bonds, and all these other things. But why not put your money in the most efficient vehicle possible to solve all those problems? Opportunity fund, emergency fund, you have your life insurance now. You're getting a really good savings growth rate as well. Tax, like, you get so many benefits from it. And you're out of the banking system too. Like, if you are concerned about banks, like, I still have some money in the bank, but
of course
it's nowhere close to what it used to be. That's for sure. Because it wasn't doing anything for me. It was just sitting there waiting waiting for the bail-in that's eventually going to come out. Like, do we really want to do that? No.
No, man. I look at it like this is, and I talk about it all the time. I probably say this more than anything else, is that the reason people are struggling with their money is because their money is not in alignment with their values and beliefs. And,
amen to that, man.
For me, I really love this. And, Garrett Gunderson and I were talking about this, and, it's the idea of buying your net worth and building your cash flow. And so, I'm married. I got 3 kids. I'm not doing all this for myself. Don't get me wrong. I enjoy it. I want good things. I want to live a good life. I want to experience fun things and like all that stuff. But the real why for me is my kids and my grandkids and the family that I have yet to meet. And, I grew up in a trailer park, and I grew up, with nothing. And like, I really feel this calling to leave more and leave not just more stuff and not just more money, but like better principles, better habits, better understanding, better education. Right. Like my parents didn't teach me anything, when it came to this stuff. And I had to learn the hard way, probably much like you did. And the idea of being able to buy your net worth and build your cash flow is just saying, like, think about it this way. If you make $100,000 a year, $50,000 a year, it doesn't even matter. But let's say $50,000 a year. What happens is you could say multiply that number by 20. And what a company is going to do is going to say, if you are making $50,000 a year and you implement good financial behavior and you save a certain amount of money and you invest it properly and you save properly and you budget well and you're disciplined, your future potential net worth is, say, $2 million. That's what they're going to tell you that you have the ability to accomplish.
Okay.
And so if that's the goal, to me, I have the ability, if I'm making $50,000 in that situation, to just lock that $2 million net worth in if anything happens to me. Because if it's genuinely for my kids and my grandkids and setting that up, well, I can self-actualize that immediately by having a whole life policy as my savings vehicle. Now, if I live a long, healthy, fruitful, productive, contributory life, well, it's amazing because now I can actually focus on saving that money. I have access to cash value. I can invest in real estate. I can build my cash flow. I can create more freedom. I can increase my impact in the world, all these different things. And so that's great. But all at the same time, if anything goes wrong, the plan instantaneously self-actualizes. And think about like the peace of mind you have with that. I mean, you said I know you just got a policy not long ago, like what, 6 months ago or so, and
I just got my second one.
Yeah. So it's just like, when you get those things put in place, like I just came down to the DR, right? Like, and I just got another policy, put in place coming down here. And so it's like, it's pretty awesome to know that you have the ability to just complete the plan, and that your plan is completed before you even started. And when you do that, the whole thing just becomes a game.
There's so much power in that. That was such a huge light bulb moment for me. It's like realizing that when you get these policies, your net worth immediately skyrockets.
Yep.
And it gives you also permission to do those. Not necessarily permission, I guess permission to spend assets like in retirement and stuff like that.
Sure.
But also where you can focus on building the wealth instead of like trying to build up this net worth that you're going to pass on to spouse, kids, next generation, et cetera, because it's already there now, right? And that it reminds me of another light bulb moment that really went off for me at some point during this rabbit hole that I've gone down. And I'd love for you to touch on this a little bit. You mentioned it on the panel the other day, but the difference between saving and investing, that sounds like such a simple, common sense statement. But until you really think about it and have that light bulb go on, like so many people are just investing for their future right now. They don't have any financial foundation if something were to happen, like you were mentioning earlier, a car accident or something like that, they'd be ruined. So talk to me about the difference between saving and investing, why that is so important to understand, because it's huge.
Well, I think what makes the problem even worse is not just the lack of understanding of the difference between saving and investing. It's that the words that are being intentionally used to manipulate people's level of understanding. Like when you say, I have a 401k account, people say, I'm saving in my 401k. No, you're not. You're investing in your 401k.
Big difference.
Right? I'm saving for retirement. No, you're not. You're investing for retirement. And the difference between saving and investing is just a function of risk, but risk equals chance of loss, right? And that goes back to what we were talking about earlier. And what I know is that, like, and this is just what I've experienced in talking to thousands of people, professionals, clients, all these things. And what I've experienced is that it's very easy to make it look really sexy and attractive on a spreadsheet, on an Excel sheet, on a software system that will show you like the compound growth, curve of an investment in a mutual fund at 8%, or just buy and holding the S&P 500 if the average is 8%. And they show all these things, but what they don't show is the fact that money is more emotional than it is mathematical. Always, 100% of the time. And people are human beings, and people make decisions emotionally, and then they validate those decisions with logic. And maybe the spreadsheet is the logic side, but at the end of the day, people are going to take their vacations. They're going to spend money on their kids' weddings that they maybe don't have. They're going to have medical emergencies that come up. They're going to have to take care of their parents when they're in retirement. They're going to have to do all of these things. Cars are going to break down. Air conditioner units are going to go out at their house. Like all this stuff that you have to deal with the here and now. Mm-hmm. And all those things are emotional. And if you don't have the safe money and the savings and your foundation built, that before you start building all the investment in the high risk, what happens is you start having to lean on that high risk asset for something it was never intended to be used for. And now your emotional reasons for how you needed to use that money completely derail your life. And I got news for you. If you look at a compound growth curve and you're saying, hey, I'm going to work for 40 years and I'm going to have this money work for me, and these are all the numbers. If you have one 10-year blip where you screw something up and you got to start over, which I almost guarantee 98% of the people in this world have to go through, then you're screwed. You have no chance if you're following a traditional system. But that's why, I wrote the book Cashflow Hacking, is showing people that you can, if you're willing to slow down, save first, save with the intent of investing, and then focus on investing in cash flow producing assets and not think about accumulation, rather than taking 40 years to retire, you can do it in 10 to 15 at the most.
Right. Man, that was such a huge light bulb moment for me. And I remember, like, when I was starting to come out of the terrible financial situation I put myself in, I was fortunate in that because I had been in that situation, I was not worried about investing at all. I wanted to put safe money in place. I finally, without like really thinking about the difference between saving and investing, I subconsciously just started to understand how important it is to have a solid financial foundation. And it's really sad that the system teaches us the exact opposite. Dump all your money into this 401k. Look, I'm not saying 401ks are bad or anything. Definitely not for me. All right. But I could see where it might be valuable for some people, but they're taught that they are saving money here. Well, what happens if you have an emergency and you have to tap into that? Well, like you said, if you interrupt that compound growth that you're supposed to be getting in the market, in just a couple of years, man, that makes a huge difference in the long-term results. Like when you understand how compound growth actually works. And it's just kind of sad to me, like when I see so many people dumping money into these things. They have no idea what they're putting their money into, and they're just going based off what these financial advisors put together on this spreadsheet. And 9 times out of 10, that's not what's going to happen. I watched, or I looked at an article the other day, and I think it was like Forbes or whatnot, and it was going through the average balance of 401ks, like at 65 and whatnot. It was pathetic. Like when you listen to people like Dave Ramsey, who tell you to invest in these mutual funds and 401ks and stuff like that, and they're telling you that you're going to have millions of dollars.
You know what's worse about that?
Why doesn't that actually happen? It's because it's not.
Well, you know what's worse about that is because everybody talks about the average, and this is where statistics are misleading. Everybody can talk about like the average 401k account for somebody in their 60s. I don't remember what the number is, but like it's higher than you would think, right? The average, but the mean or median, which is like 50% of the population is above and 50% of the population is below. The median was like $72,000 or something like that. I don't remember the exact number. I did a video on this like 2 or 3 months ago, but like it's crazy, man.
The average that I saw was only like $260,000. I'm just thinking, like, if you're 65 or 70, how are you going to live?
You're toast.
You're like you can't toast. You can't survive retirement on that. It's just ridiculous.
No, they're going to keep working. You got to keep working.
It's really sad.
Mm-hmm.
So yeah, interesting stuff. I want to switch over to something specific about whole life insurance. It's just I tell you, Chris, I get some really bizarre comments for us, particularly from IUL agents and people bashing whole life, and it really doesn't make sense to me. I want to get your take on, what do you say to somebody? We're talking about saving, like using dividend paying whole life insurance for savings and stuff like that.
Mm-hmm.
What do you say when someone tells you that whole life insurance sucks because it gets a terrible rate of return? I literally had somebody on my channel the other day comment on my policy breakdown, saying that it was a wealth killer, because my channel's called Millennial Wealth Creator. He's trying to be smart. Oh, your policy is a wealth killer. And I'm looking at like the cash value long term. It's going to net 3 to 5% tax-free compound growth every single year. And it just kind of blew my mind how you would think that this is a wealth killer, and that a 4% average internal rate of return on a very efficient savings vehicle is bad. Like, I guess it would depend on what you're comparing it to, which you're not usually comparing it to anything comparable. But it's really bizarre when people say that. So how do you address that when someone says, whole life gets a terrible rate of return?
You can't fix stupid, I guess, is the only way. Like, these people, this is all I can say is, it's the conversation. We talked about it the other day. It's utilizing whole life insurance as a savings alternative is a great concept, because it opens up opportunity, and you're taking risk in other areas like real estate or like a business or something of that nature. Take risk in things that you understand and can control, right? Invest in yourself. The best asset you're ever going to have is yourself, and your ability to create cash flow is going to be the best thing that you ever have, especially for people that are making in the $30,000 to $80,000 range. Like, it's way easier for those people to invest in themselves and increase their, potential to earn and create, all while creating the lifestyle that they want to live at the same time, if they just can figure that out. The challenge with IUL and this person is they just don't understand simple concepts. They sell off spreadsheets. They compare it to a rate of return. They refuse to acknowledge that the rate of return that they're selling in the IUL is not realistic. My guess is anybody that says that, they've probably been doing this job for 3 years or less. They've never really experienced and run annual reviews for any significant period of time. They have no ability to, they have no fruit on the tree. Like, it's that simple. The people that I find still love IUL are either crooks or they're naive, and they have just not been around long enough to learn the truth. It's one of the two.
Yeah. It's a really bizarre argument. And the way I think about it sometimes is like, okay, so if I were to go to you and say, hey, down the street, there's this bank offering a savings account that's going to pay you 4% tax-free compound growth for the rest of your life. And you can actually use the money to build wealth without interrupting that compound growth.
Yeah.
Does that sound like a good savings account? I think most people would say yes. But then as soon as you hear it's dividend paying whole life insurance, all of a sudden it sucks. Not really.
If I think you want to know what a whole life policy is, just to keep it really simple for everybody, it's savings, or I'll say money market like liquidity, okay? Municipal bond like tax treatment, and bond like returns. All of those three areas have tons of money put in them, and then you tap on, you could say bonds get a lot of money put in them, money market accounts have a lot in them, and muni bonds have a lot of money in them. Right. And then you tap on or add on top of that the life insurance component, the living benefits component to it. And it's going to get you all of those things wrapped in one wrapper with one product that's going to be there and grow with you and be able to be used in different ways as you go through life.
Yep.
There's nothing that touches it. So anybody that says it's a wealth killer, to me, they're just so uneducated. It's not even worth your time.
Yeah, it was more entertaining than anything else. That's for sure. And a couple of other things on that really quick, and then we'll move on. It's just, I think too, people are so fixated on rate of return as well. And also, like, the analogy or question that I'll ask when people bring this up, but number one, we don't set these policies up for rate of return. For me, it's just a bonus. Like it's just, again, it's just a really good savings vehicle, right?
Sure.
So you don't set it up for rate of return.
Sure.
But also, like you're saying it's bad because it's the rate of return is bad. That's like saying, like, does Warren Buffett, when he is going to go in and buy a company and purchase hundreds of millions of dollars of stock or whatever, does he only look at the income statement and just say and make his decision off of that? Or does he also look at management, balance sheet, industry, overall economy, like all of the other things that like to put the whole picture together? So like just to focus on rate of return for a whole life policy is completely defeating the purpose. Like there's so many other things involved, so many other benefits that you get. You can't just base it on rate of return. And it's a terrible rate of return compared to what? Your stock market?
For sure.
I mean, you want to roll the dice with your financial future on the stock market, be my guest. But also what I say is if you're so confident in your IUL, in your stock market returns and whatnot, why not put what you're going to invest into the whole life policy first, set your financial foundation, borrow from the policy, put it into the market if you're that confident. I would never do that. Certainly not recommending to do that. But like if you're so confident in that stuff, why not put the financial foundation in place first? Like just, those types of things just kind of, they hold no weight. I was just curious to hear what your thoughts are on the rate of return issue.
Well, I think people need to stop thinking about rate of return and they need to be thinking about what they're actually trying to accomplish and what like each thing that we do with our money and that we do in everything in life is like we have a different desired result. Like what's the result that we're after?
Right.
And I'm not putting money in a whole life policy to get massive returns. It's not the result I'm after. And so to expect that whole life is going to give you all these benefits that are so magical that we talk about and get you these amazing returns is just delusional. It's never going to happen. There's not an asset in the world that can provide that. It's a too good to be true kind of situation. And so the question is
kind of like IUL.
Yeah, exactly. So it's just like that's not what life insurance companies do. They're designed to be long-term, stable, guaranteed, beat inflation, beat the banks, very basic things. And you're going to have liquidity of the money so you can actually then go and do what you want. Like, I mean, you have Nelson Nash and his infinite banking stuff, even though I'm how I feel about the infinite banking stuff, and at least the marketing of it and whatnot. But he would always say, the more money I have in my whole life policies, the more opportunity has a way of tracking me down.
Yes, 100%.
And that's it. And so you're not putting your money in a whole life policy, but to get big returns. But I promise you, the more money you have in your whole life policy, the more you're going to be able to seek down returns or track down returns that are going to get you massive returns that you would not have otherwise. So I would say the opportunity cost of not having money in there is far supersedes what you have the ability to earn had you put that money in the stock market.
I couldn't agree more, because I'm using my policy to do exactly that right now. You mentioned earlier, take risk in things that you can control, understand.
Yeah.
I also like taking risks on things that are backed by hard assets. So doing private money lending, flipping heavy equipment right now. Nice. They conveniently leave out the rates of return on that I'm getting because of my policy. Not to mention, while I'm doing that, I'm getting tax-free, uninterrupted compound growth. You're kind of making money twice there. And that's where the real rate of return comes from, is how you're utilizing the policy to build wealth like you normally would anyways, right?
Totally.
So it's
one of those things, man, where if you are somebody who I would say whole life policy can work for everybody. And I truly believe it should be a foundational asset for every single household in America, in the world. I know some countries don't have it the same way we do. But I think if every household had it within a generation, all the financial woes of our nation would be healed. That's what I know.
Yeah, for sure. 100%.
And I also know that that's never going to happen. And, while everybody should have it, the people that really, 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 really have the opportunity to benefit from utilizing these strategies are people that are more entrepreneurial mindseted, people that are into real estate investing, people that are doing exactly what you're talking about and looking for deals, looking to, do hard money lending, looking to, flip. I had some of my first clients were auto shop mechanics, right? Some of the first policies I ever wrote back in like 2015, right before I gave like in that range with whole life, when I started to really shift from IUL to whole life, and auto mechanics that would go out and they would buy cars that were broken down. They'd use policy loans, buy it, finance the fixing of the cars through their policy, and then flip each car for 20-30% profit.
Right.
You know what I mean?
Awesome.
Like, boom.
That's how you do it.
That's awesome.
That's how you do it.
All without interrupting the growth of their money inside the policy, right?
Right.
And so, and the interest expense that they had was a write-off, so it's all good stuff. You know what I mean? And
you can't beat it, man. It's so powerful. And it's interesting you bring up everybody, should probably have this. It's interesting when you look back at in history and you do your research, a ton of people used to have like whole life insurance used to be the primary savings vehicle for the average American family, and just slowly over time got more and more into mutual funds and bonds and all this other stuff. And I don't think it's any coincidence that now we see like people with record levels of debt, credit card debt, personal debt, underperforming 401ks. That's not a coincidence that with the decline of whole life insurance as the primary savings vehicle in their life. So yeah, it's real interesting. So I want to wrap up with a final question to you. It's going to be about IUL. So just to prepare you. Okay. Sure. Because I can't have you on my channel without beating it up a little bit. But this, I'll tell you, Chris, this is one of the most concerning parts about the IUL argument. It's not even necessarily IUL itself, even though I'm not a fan. I think it's a fundamentally flawed product. I think it's pointless. I've done plenty of videos on why. But if someone understands how it works and they still want to roll the dice, who am I to tell them not to do it? Just understand what you're getting into, okay?
Of course.
But here's the biggest pet peeve of mine so far with IUL, and I've seen this multiple times come out of multiple agents' mouths. So here's my question. Can IULs lose money, Chris?
Absolutely.
So why do so many IUL agents say that you can't? Because I've had multiple back and forths with IUL agents over the past couple of weeks where they are saying you can never lose money. These are literally the words out of their mouth, what they put in the comments. You can never lose money in an IUL.
Tell them to tell that to their compliance officer.
That's what I thought. I don't know how they get away with it.
I don't know how you get away with that. Like, look at the guaranteed column, and they almost always lose money, even when they're funded properly. I come from the world of like thinking about making decisions through the lens of what's the upside, what's the downside. Can I live with the downside? And I want to look at the worst case scenario, and if I can live with the results of that, then I'll take the chance of the upside potential. With IUL, you can absolutely lose money. They always try to say zero is your hero, and you can't lose money due to market risk. Because if the market goes down 20%, you got a 0% floor. But at the end of the day, when you get into retirement and you have loans out and all these different things, that loan interest is due. And when you have a 0% year and you don't get the credits from the S&P doing well or the index doing well, and then you got to make those loan expenses, that's going to come out. And even on a flat year, I've seen policies lose 20 and 30% in 1 year on a 0% S&P year, right? So think about that. And so when anybody who's saying that just hasn't been around long enough, they just haven't seen it. They're looking at the illustrations. They don't understand what they're selling. And this is like, we've got a friend who always likes to comment, in the comment when I go live. And, I tell him, he thinks he knows a lot about this stuff, but it's like he doesn't have one success case. He can't even point to one success case from him or from a mentor of his strategies that he's claiming are these ironclad, locked in stone, diamond hard strategies, right? And there's not one long-term use case that has done exactly his strategy and had success from beginning to end. Right. So to me, that's all speculation. And when you sell speculative stuff as this like just locked, solid, guaranteed way of doing things, that's where it gets really dangerous. And that's why in my book, IUL Exposed, the truth about the most misrepresented product in financial history, that's going to be coming out later this year.
Can't wait for that.
You know, that's why I'm doing it, because it is the most misrepresented product in history. It's not to say that IULs are all bad. There are things that they can do. There are ways they can be used that are beneficial, that create flexibility and all these things. Yeah. It's just not, and it never was meant to be utilized for tax-free income at retirement. That is not what it was. That was a marketing play that the companies used in 2009, 2008, after the recession, because they saw a chance to grab money. They saw a chance to shift the risk from them to you, the policyholder. And, you know, that it's that simple.
It's crazy. And, you know, like you were talking about the tax-free income part of it. Like I'm not a huge fan of that in general, but the amount of income they show for life, and then no 0 years is just egregious. And when I read comments and I hear IUL agents say these things, like you can never lose money, I try to give the benefit of the doubt, thinking that maybe like what they're talking about is you can't lose money in the market, but you can't say that, because that's a whole different statement. You can't lose money in the market versus you can never lose money.
Yeah.
Those are two very big different statements. And it's so misleading to people. And what you were mentioning, like about the income and the loan balance, that's I want to be clear for the audience here. That's really where the risk is injected into these policies. It's not so much during the cash accumulation phase. Yeah. It's when you start taking income, when you have that 0 year and you have $1 million loan balance, which is not hard to get to according to your IUL retirement income, where you're taking 8 to 10% every year. Man, where does that $50,000 of interest come from? It comes from the cash value. So you like,
and they talk about compounding when you're taking loans in retirement through your policy. And everybody says, oh, you have simple interest. Well, when you don't pay your simple interest, that interest compounds on you.
Right.
And so in retirement, that interest compounds against you. And so the compound effect has a negative effect in that regard. And so, you know, a couple years, 5-10 years into retirement, when you have those down years, or one down year, or say 2 down years in a 3-year period, you can be in a world of hurt.
Yeah.
And probably will be. And if that happens before you're 75, you're going to get hit with a massive taxable event.
Right in retirement. It's so crazy.
Yep.
And look, even if you're able to manage the risk, you know, you lower your death benefit and like whatever, you avoid the policy lapsing. The policy still blows up in your face, man. You're not going to get anywhere near the amount of retirement income that they're showing, and that is going to have a massive impact long term. It's really sad. So, awesome, man. Well, hey, I guess we'll go ahead and wrap up. I was going to ask you one more question, if you have time. It could be really brief. I was curious to see. I meant to ask this a little bit earlier. Are you using the cash value in your policies right now to build wealth and do things? Or are you keeping that dry powder right now available for opportunities in the near future?
Yeah, it's a good question. I mean, some of that is already deployed down here in the Dominican.
Gotcha.
You know, and so working on rebuilding and paying back loans and managing all that to capitalize.
Nice.
And make that happen. But yeah, it's because I do think 2024 is the year that we need to be eliminating debt, being as debt free as possible.
For sure.
You know, and making sure you're positioned, you know, for the next cycle to come, because I think it's coming.
Yep. No, I couldn't agree more. Same thing. Keep trying to, you know, I'm doing the, you know, my private money lending and all that stuff, but I'm definitely keeping stuff available. So anyways, Chris, can't thank you enough for being here, man.
Awesome, brother.
It's an awesome conversation. Absolute blast. I love talking about this stuff.
Well, we'll do it again.
I'm really looking forward to it. So Chris from Life180, I'll link everything down below. Of course, I'm part of the agency too. So
rock on.
You know, we'll have
everybody, if you're watching this and it resonated with you, you need to set up a call with Matt. He's amazing. He's passionate about it. You can tell. Get on the horn with him and just try to figure out what this could or couldn't look like in your life. I feel like once you dig into it, once you go down the rabbit hole, take the time, go slow with this stuff. It's one of the most important decisions you're going to make in your life. So make sure you take your time with it, that you understand it, you learn. Don't make any rash decisions, but like start the process of the education, because you owe it to you, you owe it to your family, because this stuff is huge.
100%, man. Well, I really appreciate the opportunity to be part of your agency, be on the front lines with you. It's going to be a lot of fun. We're going to do good things, man. So
all right, brother.
I appreciate it. Look forward to the next one.
Thanks, man.
All right, man. Take care.
Talk to you. See ya.